Welcome back to Yahoo Finance Live, everyone. Time for Sozzi's Takes. We've been talking a lot about a slew of earnings reports all morning long. No surprise that Sozzi's Take today is on Yum Brands. Okay, break this one down for us.
Yeah, I'm zooming in, as the 20-somethings would say, on profit margins within the fast food companies. Yum Brands out with earnings today, and really, by and large, margins, operating profit margins were under pressure. KFC margins, they were down in the most recent quarter, despite the introduction of those new Beyond Meat chicken fingers, which I like nonetheless. Margins down. Taco Bell profit margins down. Pizza Hut margins were up, which is interesting, and I have to make a note and go back to that a little bit later and dig into it more. Why that happened, because it was not the norm. Switching gears a little bit here, Starbucks, we heard from Starbucks last night, in addition to them rolling out drive-thrus and various other things. Operating margins down 300 basis points year over year for Starbucks. And last but not least, and lost in the sauce, the sauce here is Wingstop. Its margins were down 480 basis points year over year, and you can see our team right there putting me holding a wing, and I am not surprised by that graphic at all. But there are a couple of dynamics going on here, more so than the pressures related to higher wages. There is increased training costs. You heard Starbucks CEO Howard Schultz talk about that on the call last night. They're investing more to better train their workers. Bonus payments. I think Schultz hinted at a potential bonus payment to workers on August 1st, something to watch out for. Higher transportation costs, higher ingredient costs. So margins are really under pressure across the board because of these factors, which leads me to my take here today is you just may want to eat the food, not the stocks, because for as long as margins stay under pressure, it is likely these stocks, which have been under pressure the past 3 months, they will probably stay under pressure.
There's one other thing that you didn't talk about, if
great.
I may. Usually you're very comprehensive, but there's one thing you didn't talk about, and that's China, which I don't think Wingstop is exposed. They don't have any stores in China,
no, they don't.
Right? But the others do. Mm-hmm. And China was a big issue for Starbucks, Yum as well. We're seeing some weekness.
Well,
Yum China's separate, I guess.
Starbucks same-store sales in China down 23%.
Yeah.
And to your point, we've seen China being a weak point throughout many companies and, of course, fast food. And when that happens, you lose leverage over your sales. You're just essentially bringing less sales, and your expenses basically stay the same. Hence, you see profit margin pressure, like we saw at the fast food players. But I guess everybody wants to know, like, what is our favorite fast food? Like, what are we going to? I'm going Taco Bell. I'm going soft chicken taco supreme at 12 p.m. after 6 beers.
Interesting.
12 p.m. after 6 beers?
Or 7.
12, wait. Noon. As of noon, you've already had 6 or 7 beers?
At midnight. Is that 12 p.m.? Drawing a blank.
That's 12 a.m.
All right, midnight.
Whew,
midnight.
I was getting a little worried about your after-show routine for a second there.
And what led up to it?
Brad, what do you got? Favorite fast food?
I'm going to go Popeyes, actually.
Okay, fair enough.
Yeah, because you can smell it getting off the train in Brooklyn.
I don't
eat fast food.
I
knew you were going to say that. I knew it.
You know, I like Chipotle, but
right.
that's not real. That's fast casual.
Fast casual, yeah.
Yeah, exactly.